This is a demonstration of exercise 426, preparing a worksheet, closing entries, and a post-closing trial balance. Houston Veterinary Hospital completed the following worksheet as of December 31st, 2024, and we are given a partially completed worksheet for Houston Veterinary Hospital. So we have the unadjusted trial balance, the adjustments, and then we have the adjusted trial balance. So the requirements in number 1 are to complete the worksheet. So to complete the worksheet, we are going to transfer the amounts from the unadjusted trial balance to either the income statement columns or the balance sheet columns. And this will facilitate or help us complete our financial statements and our closing entries. So the first account is cash, which is $31,200, and that will go in the debit column of the balance sheet. The next is accounts receivable, which is $1,100 adjusted, and then office supplies $1,225, and then prepaid rent, which is $5,400, and all of these are assets, so they all have debit balances, and so does equipment. Our first credit balance is our accumulated depreciation equipment, which is a contra asset, but it goes in the credit column. Then we have our first liability, which is accounts payable, and then utilities payable, and then salaries payable, and then the last liability is unearned revenue, $11,700. And then we have our common stock, which is also a credit balance, and we have our beginning balance for retained earnings. So right now we still have $55,690 for retained earnings. The dividends will go in the debit column of the balance sheet because they will eventually be close to retained earnings. The first income statement account, we're going to go to those columns now, is going to be service revenue. So we want to put the service revenue in the credit column, and then we're going to put all of our debits in the debit column of the income statement. So our first one will be rent expense at $23,600. And then we have our salaries expense, $13,075, and then supplies expense is $275, and utilities expense is $11,000, and the last expense is depreciation expense, equipment for $1,900. Now the spreadsheet, which is one of the good things about it, has been totaling the columns as we've been completing the worksheet, and we can see that our total in our credit column is $37,700, and the total in our debit column is $49,850. So the veterinary hospital has actually had a net loss, because when your expenses exceed your revenues, then you have had a net loss, and specifically the amount or the difference between these is $12,150. So when we complete our worksheet, that amount is in the credit column, so that our debit and credit columns for the income statement will be equal, and they are $49,850. Now the spreadsheet has done the same thing for the balance sheet column. So in the debit column we had $102,925, and we had $115,075 in the credit column. If you have a net loss, then it would go in your debit column, and then we see that the balances in our debit and credit columns now equal at $115,075. So that completes the worksheet, and we would use the information in the two columns, the income statement and the balance sheet, to complete our financial statements. We will next, in the problem, prepare the closing entries. So we know that we close our temporary accounts at the end of each period so that we can begin over again to calculate how much revenue and expenses that we had. So we know from our worksheet that our service revenue had a credit balance of $37,700. So to close that account, we would need to debit service revenue for $37,700 and credit income summary for the same amount. Next, we're going to close our expense account. So we can see all of our expenses were, of course, debit balances. So to close those, we're going to credit each one of these accounts. So $23,600 for rent expense, $13,075 for salaries expense, supplies expense was $275. Our utilities expense was $11,000, and then our last expense was our depreciation equipment at $1,900. And we know from our spreadsheet that the total for all of our expenses was $49,850. So that would be the total that we would need to debit to our income summary. Next, we need to close income summary. Now, we know that our expenses exceeded our revenue. So in this case, we are going to have to debit retained earnings and credit income summary to close it. So we would debit retained earnings for $12,150. That was the net loss, and we would credit income summary for the same amount, and now income summary would be zero. But we still need to close our dividends. So we know that our dividends were $28,000. To close that debit balance, we would debit retained earnings for $28,000, and we would credit dividends for the same amount. And that would close all of the temporary accounts. After we have closed the temporary accounts, we do prepare one more trial balance, and that is a post-closing trial balance. So that will be the third part of this exercise. So I'm going to move that information up on the spreadsheet. Okay, and so now we're going to see that the only accounts that will be left after you have done your closing entries are going to be your permanent accounts. So only your balance sheet accounts will be open. So now we're going to put our debits and our credits from the worksheet, except for retained earnings, which we're going to calculate, and we're going to see whether or not our accounts are in balance. We do this so that we're ready to start our next period. So $31,200 for cash, $10,100 for accounts receivable, office supplies $1,225, prepaid insurance $5,400, and then our equipment was $27,000. And don't forget, your accumulated depreciation is a contra equity, so it goes in the credit column. Accounts payable is $3,400. Utilities payable is $310. Salaries payable is $1,075. We have our unearned revenue, which was $11,700, and our common stock was $41,000, and we need to calculate what the ending balance would be in retained earnings. So we can see that our beginning balance was $55,690. If you remember, we closed our net loss to retained earnings, so that would be a debit to retained earnings of $12,150, and we also debited retained earnings for the $28,000 for the dividends. So our ending retained earnings balance would be $15,540. And now we can see that we are in balance. The total debits and the total credits in our balance sheet accounts, our permanent accounts, do equal at $74,925. And that is the conclusion of the demonstration for exercise 426.